Okay, guys, so welcome to our afternoon session. I'm not going to take too long. I'm going to start with gold first because that's what I've been observing. So gold has dropped into this D1 demand zone here, which was the lower down stop on activity that we're looking at. Now, it seems like on the H4, from 11 o'clock onwards, we have a H4 stop on here. And I'm not too sure what news has come out. As I promised, I'll take a look at the news now. Let me just pull up the news here so that we can see what's causing it. Just give me a second. If I get the news over here. All right, so pulling up the news here. Let's see what we have for today anyway. So right now we've just had the employment cost index and the gross domestic product for Canada for November. Now, usually times like 1:30, 3 o'clock, 2 o'clock, those kind of times always produce something, whether there's news or not. And it's mainly just because of the opens and closes of different sessions and stuff. But at the moment anyway, the only high impact news I can see is from New Zealand, which is coming out to be at 9:45. So like 15 minutes before the new day starts, which is a bit of a tricky time to deal with, but nonetheless, it's still a good time to be able to possibly grab some profit on something. So for me, I mean, I'm wanting to see what's going to happen. I mean, the volatility in the market, I'm not surprised by at all, but this is really what's happened over here. Now, I mean, if on the M5 right now, the stop hunt has happened here. We've had a break of market structure here. Whether gold will come back or not, I'm not too sure about. Um, I see that, again, the market algorithm is very specific. These highs here, these equal highs, this is where the market has come to over here. And let me just grab this here. Now that we broke a market structure, if there was a chance and the price did come back maybe here, I might take the trade like maybe at 2 o'clock if the price decided to reverse here. That would be a bad long. And my target would be back up to this point right here. But we'll just have to see. I mean, usually Monday and Tuesday is usually the first wave of pushes of movement. And then after Wednesday comes with the reversal. That's usually how it goes in the market. So, I mean, okay, ignore that. This is just some object-oriented programming stuff that I was doing. I need to actually remove the indicator from the chart. Let me see if I can take it off here. So I'm going to try to do the best I can. Let me just take this off. So give me a second. This is not part of the story. Give me a second. So delete this here. So if you're thinking what's animal class is object-oriented programming. This over here. I need to get off the chart because it's in the way. It's something that I was doing before. But by the way, guys, so as a quick update, I don't know how many of you guys have seen it. So I've put the newer indicator. I wrote the code yesterday morning because I'm finding that with the drag and drop one that I've been giving to you guys, it works sometimes and then sometimes it doesn't work. I had a look at the code, the other one that I had. There's no point of updating that one. I'm just going to remove it from the library. But the new one that I've written, it works 100% of the time. I make sure of it myself. I made a quick video for you guys to test it. So if you haven't tested it, please feel free to go and test it. And then after we can go from there. All right. So yeah, that's really that. Now I need to find a way to get rid of this comments on the chart. I'll sort it out afterwards. I know what's wrong with it, but it's fine. Yeah. So anyway, the thing with gold anyway that the price has done, where is it? Back here. Now that the price has done this, it hasn't gone into this zone. So I do think that the FOMC news is going to push the price up here. I'm hoping that from this H4 stop and it does give an RTO at 2 o'clock. If it does, I'll take it long. If not, then no problem at all. All right, but just going in order, let's look at the dollar index. So you can see the dollar index is rising, and maybe from this chart here, you can't tell properly because it's from December. So as a recap from this morning, one of the biggest reasons why I love IC markets is that they don't have the futures contract version of the dollar index. The reason why, if you're looking for the DXY and you can't find the price sometimes, is because they do it by futures contracts. So every 30 days, they bring out a new chart and then the old one just gets lodged somewhere. So you need to read it to be able to know what's actually going on. So if I scroll around for a bit, I'm going to find a few DXYs. Now, this DXY is for November, December. I need the one that's presently running now. And to find it, I'm going to have to go here. So I need H3. So right now, currently, H3 means January the 1st or January. And you can see what's happened here. So H3. So I think, okay, this one is a 3-month futures contract. Let me just check the specification here. So yes, let's see. 3-day swap market. Okay, it doesn't actually say the information from it at all, but if it does, but from the looks of it, it looks like it's a 3-day 3-month situation. So it's got November, December, and then January. So 3 months, 90-day kind of situation. But anyway, from the weekly, the stop hunt that we've been looking at is still holding, and now price is really pushing for a long. Now we do still need a market structure break, even though the price has pulled back. I would say on the H4, one of the biggest things that are important to pay attention to is that now on the H4, the body of the previous candle, so the H4 candle for this week has closed above the previous week. So we do have a continuation long signal now, where we really will start to get confidence to know that we're starting to go long, even though I know for a fact we are, is when the price starts to break these higher structures here. So when the price starts to do things like this, and over here like this, these are more structural confidence of market structure breaks up here. When we start to get to 103, at the moment, price is pulling back, and it very, very well be doing this situation here where it's returning to the demand zone. Because as I said, all the major pairs and every dollar denominated asset is all very sensitively connected to the dollar index. And at the moment, this H4 situation where the prices close above the high is quite an important structural break. If the price goes into this demand zone and starts to reverse, then we might see another reversal and then gold going short again, and then US dollar pairs going long. All right, so that with that in mind now, you know what I think about gold. It hasn't returned to this area here. So even though it's a great weekly stop hunt, and I really and truly should have just taken it short, because I don't know how much more stop hunt it's going to do. But because the FOMC news hasn't happened, I'm not taking that chance because the price may spike very strongly above here. But since the price is reacting here strongly, I would like to take a look and see what's going to happen. The next situation is USD CAD. Now, USD CAD, as I said, I don't buy the trade. Like, no pun intended. I know we're doing buys and sells. I'm not actually trying to be funny. I actually don't buy that the price is going to go long from here. Now, this USD CAD chart is a bit messy, but if I pull this one up here, you'll see that we had a tiny weekly stop hunt, which produced about 150 pips from top to bottom. Okay, a bit more, 172. And from the H4, if I just drag this here, prices come back to supply. Now, why this supply zone? Well, this is the last strong liquidity void that was created. So any liquidity imbalance started from this supply zone. So prices return back to this area. So if you did take this trade just out of a whim, then you would want to close once the price gets in here. It was a pretty good trade, but I never buy stop hunts, especially on US dollar pairs that happen in the Asian session. Because from 10 o'clock until at least the next day, far into the next day, 12 o'clock the next day, noon, the US session is not open. In fact, from 10 o'clock all the way until 12, the US is sleeping. So for the price to go long in this manner, I don't really trust it. On the H1, you can see it's the same kind of situation here. We had a strong liquidity void created from this H4 supply zone area here, and then the price has gone short based on that. So this is why the reaction is so solid from here. For me, this can actually be the entry to start going short, because remember, now I'm going to draw the H4 area very quickly. I've already given you the signal, so this is a very quick recap. I'm going to go back a little bit, see if I can move, I'm going to move the meeting thing out of the way. If I go back a little bit here, so if I take this zone here and then come over to here, yeah, there you go. So we have our H4 demand zone here, which is our RTO zone. And the RTO is based on this. Now, I hate when that happens. If I zoom out a little bit, bring this here. On the monthly, first of all, we have a flip zone that we're working with, which is this monthly flip zone here. All right. On the weekly, we have a weekly stop on that we saw last year, which is over here. And now all we really need is an RTO of it. Now, this was the first attempt. The second attempt for USD CAD is the lower down demand zone, which is also a possibility too. So I don't want to put it past the price not to do it. There's a weekly stop on also here, and the price could easily decide to not just go from here, but personally, it could even, in my view, there's nothing stopping it from going here. Now, at the moment, this is the weekly validation point. Maybe I think instead of this long line, I'm going to use a straight line here. This is the weekly validation point at the moment. And if you look at the price from the weekly as to why I think we still have a short going, is there's a stop hunt here, which is from this candle. And what the price has done right now is done basically an RTO of it. So going to the D1, then to the H4, you can see why I think this is an RTO. Now, it's not the most conventional weekly stop on, but it is still a weekly stop on according to the price. Now, if the price chooses to go from here, now I prefer if the price went into this supply zone because we have a pair of equal highs over here that didn't return to supply, and then the price has gone short. So this is why even with this dollar index situation, the price has jumped into this demand zone. What could happen is that if I take my zone back here, and this is recorded so you can play back the analysis I've given, when the price gets back into this area here, or somewhere around here, like for example, this is the high of last week. So this is a good validation point, if you want to call it that, from here. The price could bounce up and actually do a deeper RTO and start going long again. Because at the end of the day, if this is a weekly stop on, which it is, the price should have done a proper RTO. At the moment, there's unfulfilled efficiency here. So in reality, USD CAD should do one more long. And then after, by the time the news comes out for the interest rate decision. Now, if this is the case, and this is the announcement, then we might be having a negative result, which means that the US might not raise their interest rates, or they may raise their interest rates, but the market might interpret it slightly different and see it to be a negative situation. Okay, already I told you about Canada. At the moment, Canada has hiked their interest rate again by 25 basis points, but they said they have a conditional pause that they're observing to see, basically, like I explained yesterday, how much the interest rate hikes have affected the economy to kind of curb inflation. So for that to basically be the case, they're going to have to see what happens. Now, if their data figures on for the next, or by the time they get to the next interest rate decision hasn't changed and inflation is still persistent, then they're going to hike them again. Okay, but if not, then they may pause and interest rates might stay the same in Canada. Now, one thing to note that, you know, from live data, as I said, is that in Canada, the consumer price index for consumer price index, not the producer, but at least the consumer price index has gone down by at least a few point percentage, not a whole percent, but maybe like 0.4 or 0.3. So it means that the cost of goods and services are slightly cheaper, just ever so slightly cheaper than what they usually are. So since they're ever so slightly cheaper, it could signal the fact that the interest rate decisions that they've been making to hike interest rates are working, and they might actually just pause. Okay, now, for example, if the Federal Reserve pause their interest rates and they don't increase the interest rates tomorrow, then Canada probably won't do theirs either, because they're going to basically think about it and think that if the Federal Reserve doesn't see a need to increase them at the moment, then there'll be no point for us to do that also. And if that's the case, coming back to technicals now, from this weekly validation point stop on unfulfilled efficiency, if the price gets here before the news and starts to sell off and then it actually drops, that might be an entry for a very strong sell at first. And then after, whatever other news comes out might signal a buy after, like the NFPs on Friday. So that's kind of my thought. Now, the other side of the story is that if it is going to go long, which I do think the price is going to go long from, we also have this unfulfilled efficiency here, which is probably even worse than what we just looked at. This one is on the H4 kind of, but this one is a daily one, so a lot worse. The price gave us a short without returning to supply, which I spoke to you guys about already. And as you can see, the price has had a struggle to go short anyway. So somewhere along the line, one of these entry patterns is going to give us the long that we're looking for. So I've decided this time to expand on my USD CAD analysis, both technical and fundamental, so that you can have a better view of what's going on. Okay. Let's go to the next one. So USD CHF. Okay, let me take this off. Now, this is the indicator I'm talking about. So as a quick update, if you didn't see the announcement, this is not the final version of the one that I've coded. However, if you guys want to be a tester of this stop hunt indicator, which I'm going to turn into an EA, which I do have the EA for, I've written already, but it's not been tested yet. If you have the prerequisite is that you need to have a laptop and at least a demo account to test it out. And I'm going to give you a version copy that has a password on it and an expiry date. You won't be able to keep it forever, unfortunately. But I want to give it to you guys to test and see what's going on. Now, at the moment with this indicator, just as a quick promo, you can see that it's capturing the major moves. It's capturing the bottoms quite well. This is a deep type 1 D1 stop hunt. The settings I have here is caught the stop hunt here all the way down. So it does work. As I said, because you know what, one of the great things about being a programmer and a trader, I can say is that because I'm a trader first and then a programmer, it's easy for me to write code that makes sense to how we trade. So if you want to test this out for yourself, I only need at least 2 testers. So if you're watching this recording, you've got a laptop, send me a message and then I'll start issuing out copies later on this week. I'm going to probably tweak this a bit so that it can filter out the noise, because even though these stop hunts are correct, I want to kind of filter out the noise from, for example, here, over here and stuff like that, so that it's a little bit more sharper and clean. And, you know, going to the weekly here, I wanted to pick up on more recent information because it hasn't picked up on, it's not picking up on the price feed from here on the weekly, but I can refer that. That's not really a big deal. On the monthly, it has information here, so it's capturing some stuff here. So you can see all the major swings like this one here, some of the longs here. But once I finish with adding more filters to the price, to the code, then it will be even smarter and it will be a lot less arrows, but a lot more accurate ones. And then the EA, all it will really do will be taking the trades based on this arrow. So that's really the long and short of the code that I've written. And I thought that it would be important to really put this out there for you guys to see. So the longs and shorts look pretty good. Now I'm going to take the indicator off the chart for now. Or did it come off by itself? Let me take it off for now so that we can get back to USD CHF. All right. So USD CHF, where are we now? So on the monthly here, we have the monthly stop hunt. Now, I was saying this morning, and I'm going to say again, if you're using period separators, sometimes you might have to take them off to see what's going on, because the period separators sometimes, not all the time, but just a few times, can make a stop hunt length look shorter or longer. Like in this case, this stop hunt here is actually the stop hunt of the previous year's low, but with the period separator, sometimes it can make it look a little bit longer or shorter. And there's been a few times where I've made a mistake in the analysis because I was looking at a stop hunt that happened exactly on the line. Sometimes it looks like a stop hunt and I trade it as if it's a stop hunt. And then when it doesn't work out, I'm kind of confused at what went wrong. But as soon as you take off the period separators, you can see exactly what's going on. So anyway, putting them back on because the chart feels so weird without them. This is a yearly stop hunt. On the weekly here, this is the weekly equivalent over here. Type 1 weekly south. All right. Then if we go to the D1 over here. Now I gave you the trade for the long. I took it myself. It was a brilliant trade. The crux of the trade was over here. This stop hunt was the trigger that we had. We had a very clean MSB and RTO, and really the price is just continuing that. It's just taken a bit of a bumpy journey to go there, which is why I'm not in it right now. Now, yesterday I kind of choked because I should have took it again. But the market structure break, if you're wondering, was over here. And after the market structure break, we had an RTO. So what I'm going to do, let me put this zone here. So if you look at what the price is really working with, this demand zone here, even though it's quite small, is a very strong basis for the price to use as liquidity to go long. And then when we go over to this area here, I'm going to put this here. If I just change the color slightly to royal blue, maybe that's a bit too deep. Let me just change it to something that makes sense. Let me just go to here. So if we take it to somewhere over here like this, then what we have is we have a H1 stop hunt, prices push along like this, and then we had a second RTO. Now, if I take off the period separators again, which is where I choked yesterday, I thought that the price hadn't taken this low, so I didn't touch it, but it just slightly did. So I should have just got in and just let it go, and that would have been 106 pips. Right now it's at 62, but nonetheless, it was a good trade. Now, the reason why I do think the price still has longs to do is if I draw this trend line here, this trend line is an algorithmically engineered one. It's a very near perfect trend line. Anytime you see the price do something near perfect, it means it's mathematically engineered. Now, think about it logically. Human beings are random people, and human beings do random things. And even though, you know, there are patterns that you can follow with a human being, every single person trading physically wouldn't be able to specifically make the trend line this accurate. Okay, so this here is what I'll call a sell order aggregate. This is purposely engineered to get people into the selling direction. And the stop hunt, which is going to produce the greatest long we've seen in a while, was actually the strongest Judas swing south short. Okay, so for me, I can already see that the algorithm of the market is in full swing. What I would like to see is the price give us a long, which can break this trend line structure at least and come back to this supply zone, maybe even higher slightly. Okay, of course, for that to happen, we're going to need some help from the FOMC news. Now, here, the reason why the price has reacted the way it has is not only the time, but the price has taken the high of the previous week. So because the previous week's high has been taken, excuse me, it will cause a reaction. This is why the price is doing what it's doing. So I would like to see what the price is going to do with this. I mean, to be fair, if you wanted to be like meticulous about the price, we actually do have a market structure break here. This is the last swing high before we had the yearly stop on, and there's a market structure break here anyway. And we've also had a H4 bull trap here. The bull candle slightly larger than the bearish candle, which means that the bullish side of the market has more liquidity than the bearish side, but it's still a market structure break here. So on the return over here and the price going long, if the price was, for example, let's say the US dollar news came out negative and pushed back down for an RTO or whatever, it wouldn't be a problem. We would just take the long and that would be the market structure breakdown. Okay, now, one of the things I am thinking about too is that the market doesn't want to be too obvious. Now, there's some things about price action and monetary, the way money works, that can never change. As long as money is money and currency is currency, it won't change. So in order for them to or for them to invest money to go long, which is chapter 3 of the course, then they're going to have to ensure that they have enough people going in the opposite direction. Now, if they go all the way to the top here, it's going to be too obvious of a long. So they might do a smaller break, market structure break, pull back and then just take off, and then let the news do the shoot up to where they need to go. The other aspect is maybe they can make it obvious that they're trying to go long, but get everybody in long early. Remember, there's two ways that the market can try to manipulate you. Either get you in the complete opposite direction, or the other way is to get you into a trade too early or too late. So for example, this could do a long right now, but it hasn't done an RTO as we know, but then it's broken market structure here. So people think, okay, I'm going to buy. And then whilst they're in the buy and then some sort of news comes out, the price absolutely reverses on them, stops everybody out. That's the RTO. At the bottom of that move, that's our entry to go long. They've grabbed a lot of good liquidity from the buy traders who got in too early, and then they take off for the actual direction. So then by the time they get back in, the amount of money that the market makers and we have made in terms of risk to reward is a lot larger than retail traders. So this is why I would honestly say that it's important to pay attention to things like this. So with USD CHF anyway, the weekly high has been taken. I want to see what the price is going to do with it. I watch the dollar index, which is in this demand zone now, and could very easily decide to go long and then continue pushing further. When it gets to about 2-3 o'clock, then we're going to know the true character of the day. For the meantime, nothing's happened significant yet. But gold is definitely on an absolute tear. Now, I saw the price getting here and I thought I would take a long. And if I'll be truthful with you, for example, here, the reason why I didn't take it is because I didn't see the price go to this lower down demand zone. I was stuck on that one. I was hoping the price would have just kind of wicked into here and, you know, gone there. But because it didn't do it, I thought, let me just leave it. Maybe if I get in too early, I'm going to stop myself out. But lo and behold, price has gone there. So if it continues going all the way up here, then we will just know that on the way back down, this will be a good flip zone to use to continue going short. Now, I know it'll be 500 pips away, but still, if the price is going to do another 200 or 2000, excuse me, which is the case, then why not take it? But anyway, so that's USD CAD. We've got USD CHF. I'm going to come to USD JPY in a minute. ADUSD. So ADUSD, recap quickly. It won't take too long there. ADUSD on the D1, as I said to you, that some pairs have done moves that are very, let me just do something. Control B to get rid of everything, delete that. Now, looking at ADUSD, we know the price is going to go short at some time. The problem is with ADUSD is that there's no indication on a higher time frame. So what I mean by that is that on the weekly, the body of the candle from last week closed above the previous week's high. And this week we have no weekly stop on. And this is why I'm the advocate that probably the US dollar news is going to do two moves. It's going to use the FOMC to do something, the rate statement to do another, and then on Friday, the NFP is to do the other side of the story. Okay, and I do think they're all going to work together to produce what we need, because if ADUSD is going to do the short that is expected of it, and if you've lost hope in believing in the short because the price looks very strongly bullish, if you just look at this, you remember what I'm talking about. The price has failed to return to this demand zone. Okay, and there's been no stop hunt to push the price up, at least until here. The first stop hunt we had was 456 pips from this low, which means that this reversal is just a very long, extended natural reversal here. And if you want to throw this in here, you can. We have equal lows right here. So that's why I'm saying that I know for a fact the price is going to go short, but how it's going to achieve that is the question. All right. Now, there are several structural things that the price could do to go for a short. I'll start from the top. We've got a demand flip zone that the price hasn't returned to over here. That's one. We also have a supply zone that the price hasn't returned to over here. So there are so many different reasons why, I think that ADUSD could even do a further long one more time by itself, maybe, or spike or something. Now, it doesn't have to get into these areas. I want to make that clear, because remember, when we looked at NZD-USD, it took a very long time for the price to even feel that unfulfilled efficiency and start going short when I gave you guys the signal from before. So the price could easily just spike here, which is 157 pips away. Sounds like news spike to me. That can happen. And then go short from here, never come back for 2 years. And then 3 years later, the price gets somewhere down here or even lower. And then on the way back up, it feels like all of these things. So when it comes to like the weekly, the monthly, I don't get caught up too much on unfulfilled efficiencies that are far away, because they don't have to happen now. And usually they don't happen. Like this is a great example. This unfulfilled efficiency has been here since according to the weekly, since the week starting the 9th of October. From the 9th of October to now is at least 4 months, or 3 months ago. February is going to be 4 months away. So for 4 months, the price hasn't taken this low, and there's been many opportunities to do it. So that's why I'm saying that I'm not trying to focus on that too much. But this one over here is quite close, so that can happen. And if it did happen, it would make a lot of sense. So on the H4 or D1, whichever one you want, I'll start with the D1 first to put a bit more clarity here. The easiest thing the price could do right now, since we're going to a new month, February the 1st, if it took the high of the previous month, which is January, then that's a monthly stop on north, and that can be the short. Go to the H4. If the price does that, since the market started up here this week, it will also be a weekly stop on. So either way you put it, the price is kind of pointing to at least here for a short, which will be great. And that's where I'm going to start from. I'm not going to worry about these up here. I'm just going to focus on these over here, because this is still good enough for the price to go short from. Okay, so my idea with looking at ADUSD, since it's not ready, all of these other US dollar pairs, because they move in the same pattern together, all the major pairs, if ADUSD is going to go long, then the rest should be going long for now. And others, then they can catch up and go short together. Now, in some instances, some of the major pairs, or for example, gold, I don't want to add gold because gold isn't a major pair, but some of the major pairs may be in the correct positioning already before others. And so, for example, things like NZD-USD, ADUSD might be slightly behind. So what will happen is we'll have a situation where maybe some New Zealand dollar news, like the one we have at 9:45, will happen. And that will kind of boost the price up to catch up to the others. And then when it's time for them to all turn together, they all turn together. So this is the situation really when it comes to price action here. So I'm going to I'm going to go over here and keep AUD/USD as it is. I think I'm just going to leave this H1 or just close it and keep that there. But this is really my idea. So that's why I say I don't trust the price yet. And today is Tuesday. Monday and Tuesday are perfect days to get people in the wrong direction before the real news on Wednesday. And I'm sure all traders by now are quite aware. You'd be surprised some traders don't know about it, but most traders are aware that we have something going on here. But anyway, let me quickly do these last two pairs, and then I'm going to scan to see if there's anything else for the day, and then we'll talk from there. So Euro JPY, I have markings here, but I think some of you don't, I haven't given a signal for it. So I feel like some of you guys are not too sure about Euro JPY if you haven't looked at the previous videos. So I'm going to do something here quickly. So if I start over here with Euro JPY, I'm going to quickly go down to the daily to start off what I was looking at. So on the H4, or actually I'll do the weekly so you guys can see first. So on the weekly, there's an important stop hunt that the price has done here that I've been looking at with you guys to see what price is trying to do. Okay. Now there's room for the price to go long, and there's also room for the price to go short on Euro JPY. Now, overall, Japanese yen pairs are going to end up going long because as inflation keeps on going higher and higher, the Japanese yen will, or I'll say the economy and the Japanese bank or the Bank of Japan will be looking to weaken their currency as much as they can to keep lucrative as inflation increases. So overall, long term, you should always remember that Japanese yen pairs will be on their way long. When deflation happens, then they'll be going the other way. All right. But anyway, this is the weekly stop hunt, and this is another weekly stop hunt that's happened here. So I'll put these two things together. Actually, it's a monthly one. This weekly stop hunt, which is where USD JPY gave me some joy when I gave you guys a shout out for that trade. I'll just take this over here. If I draw this over here and I drag this situation here like this, we had a very nice weekly stop hunt. Now, the thing is with this trade, the price went long without doing a market structure break. There wasn't really MSB and RTO on the H4. And at the top of this point right here is where we really had the first proper market structure break, I would say. So after this market structure break here, we do need some sort of RTO, which the price has not provided. So the basis of this trade for Euro JPY for a short is basically an RTO of this stop hunt. Now, the take profits that I've given you were based on specific things. But when I go over to the H1, which is what we looked at, now I'm going to go to the H4 and draw the supply zone that I was discussing about and ranting and raving. If I draw this over here, exactly how it is. Now, sometimes when I'm not too sure graphically, what I do is just zoom in and just check. Now, if we look at this here, I'm actually going to do some writing for a minute. So over here, let's change this to black. We have a type 1 weekly stop on south. All right, so this is a type 1 weekly stop on south over here. All right, here's the market structure break on the H4. This time I'll say a H4 market structure break just to make it clear to everyone what's going on. So from the H4 market structure break that we've had here, over at this point right here is H4 supply. So H4 supply, or I'll just put supply zone. All right. So the H4 supply zone, the H4 market structure break, and the type 1 weekly stop up. Now, my problem that I had with this trade, which is why I chose NZD JPY instead of this one, which I gave it a signal for, should have triggered and given you some sort of profit. I mean, even if you held the trade right now, you should still be in profit, even if you didn't put your stop losses to break even, or if you didn't actually, I should say. Now, the price has kissed the zone, but it hasn't actually entered into the zone, which is the problem. So my issue with Euro JPY is that I thought last week the price may actually do a double stop hunt and then go short. Now, I'm happy that this week has gone past the week has gone past on a new one because we get to see a little bit more information. My only problem I have with Euro JPY is that from an RTO of a H4 supply zone, the price should be a lot more stronger in movement, but you can see there's a lot of struggle. There's still a lot of bull and bear candles. Over here, we have a liquidity void, which kind of ended over here, which I want to talk about this area in a minute. But on the H1, you know, going down is actually a H1 demand zone, by the way, but should be seeing a little bit more price action on the short side. So for me, if I take the H1 markings, now these H1 markings, ignore them because this is my mind at work. I'm going to give you clean ones so that it doesn't bring confusion. But if I go over and draw this H4 area, I'll leave out the downside markings because we don't need it right now. But if I just draw this here, same color, and then I go down to the H1. So on the H1, the price just about kissed into the zone and left some equal highs. So here's the stop hunt that we're looking at, that I was looking at here. All right, here you go. We had a stop hunt here. Here's the, I'll just type it here for you guys so you can see. So this is a type 1. D1 stop hunt north over here. And then on this side over here, if I drag this down, we have a market structure break over here. All right. So that's the market structure break. Now, the RTO on the H1 did happen. The price just kissed us, well, just about kissed the zone. Now it looks, this is my other problem here, that why I think that Euro JPY is not going short yet. On the H4, the price did touch the zone. And that's why we had a brief short when the price, opened the next day until the next week. But then my issue is that if I draw this H1 zone here, you can immediately see what the market has done is it's left a bunch of, now I won't use these highs because they've already been run by this high, but even this high over here, you can see the price hasn't returned to supply. Now, how do you know when something hasn't returned to supply, Michael? Well, I'm glad you asked. I'm going to show you right now. If you look at the price action after the move happened here, we had a manipulation bar, but over here, we have a very strong downwards movement. This is the price is struggling to go short, which means there isn't liquidity to go short the way it is. And so as a result, what I do believe has happened right here is that the price, when it spiked down here, has created a stop on here right now. And if I am right about this, then what's just happened now is that the price has done a stop hunt and now it's done an RTO, and we should actually be looking to go long just into this area. Now, just into this area is one target, but I am getting I am thinking, let's recap with the English here. I am thinking that price probably might take these equal highs because there's a whole bunch of them at this area, and then possibly deeply press further into supply. So something like this would be scenario number 2. And then scenario number 1 is just this and then a short. Now I'm going to move this a little bit to the left so that we can see what's going on. I'll draw a high here in another color, maybe just to get some information here. So if I drag this here and put that information here. So I'm going to put the trend line here. I'll put this in red. Okay. If I put it here like that, then ideally what we should be looking for would be for the price to, let me just put this here, type 1 D1 stop on here. And then this will be to take the equal highs. So I'm just going to put high of the week, high of last week. Okay. And then after that will be our short. So these are 2 scenarios that can happen. This is a simple RTO, first one. The second one is a stop hunt. And then we go short. So this would be RTO. All right, here. Maybe in this case, blue would be helpful. So let's get blue. So yeah, RTO would be here. And then the second one would be to have a weekly stop on. So I'm going to say weekly stop on. I'll use the full term this time up here. Now, I don't think it's going to fit. So let me put this as 9. Scroll this down slightly here. Yeah, it's weekly stop on RTO. And both of these are scenarios to go for a short. So 1 second. One second, guys. I'm coming. Just 1 second. Let me go and let me just quickly do something. My apologies, guys. So yeah, as I was saying, so scenario number 1 would be here. Let's put this here. So scenario number 1 is here. And then scenario number 2 would be over here. So with these two scenarios in mind, the price action that we're looking for would be one of these two areas. Okay, so I don't think I'll probably give a signal for it. The best way to test this would be for me to take a long. Now, there was a liquidity gap made at the news. I don't know if the price has filled it yet. Now, just give me a second. Let me check. So when the news went long, we had a small gap that ends about here. Yeah. And the wick of the candles actually filled it now. So we can actually say that this is a long. I'm going to put a long entry. Well, let me check something here also. Now, the low of number 1 here is 140.556. And the low here. So we have equal lows over here as well. So that's another issue. Now, I don't know if the price wants to take these equal lows before it goes long or not. What I will do is that if I go to the H1 here, I'm going to take a long now. I'll put 0.02. My stop loss is going to be the low, beneath the low of today. So I'm just going to put this here like that. So I'm going to put my stop loss underneath here. Very simple trade. And I'm going to test what I'm saying and look to see if price is going to get back in here at least. Now, it's not about the profit, so I'm not even too concerned about it, but I just want to test it out to see what the price is going to do here. All right. Now, if it doesn't work out and the price is going to go further short, then we have a very simple solution. So the other side of the story is if I go over here to the H1, like this, and then if I put a zone here, you can see this H4 area, which is this little zone here, is a very easy to read and see H1 price cap. If I put this here and I draw medium purple here. So if I draw this here and now I put this over here for you to see. So this is a H1 price cap. Yeah. Yeah, so now that we have a H1 price cap the way that it is, then what we can do with this price cap is if price breaks beneath this area, so what I'll do to make it a little bit more fancy with the markings, all we need price to do would be to break beneath here. Now, if the price decides to go all the way down for a short without returning here, which is another option, then the final way to capture Euro JPY short would simply be to wait for the price cap to break. If the price breaks this price cap, then all you've got to do is wait for the price to break and flip here. Just like when I gave you the signal from my phone for the short, it was the same situation. All you have to do is wait for the price to return on the other side. I forgot what trader. I think it's for pound CAD. I gave you guys that. All you have to do is the same thing and it should be okay. So this is scenario 2. This is scenario number 1. All right. I'll post up the scenarios here and I'll take this one off because that's just a mess. And then I'll leave Euro JPY like this for you guys to see. All right, what I'm talking about. And this schematic here, you could take a screenshot. I will post this anyway, but this is basically the price action that we're looking for here. All right, so NZD-JPY, which is the other trade, has moved a bit more strongly. Now, I was in the trade from, of course, here. This is the signal. The signal entry I gave you was here. So you should have got some profit on the day that I triggered. The market decided to open with another stop hunt, still in the same RTO area, and has gone short. Then with prices come back one more time and gone short. Now, I think with NZD-JPY, I don't think it's going to RTO again. I think the price may actually just do something slightly different where, well, to be fair, not necessarily. It may or it may not. But we'll have to just wait and see what the price is going to do. Now, to recap on NZD-JPY, which is the final trade for today. Let me just quickly go to it. So on the H4, let's scroll in here. I'll go to the D1 and then let's go to the weekly. So on the weekly and even on the monthly here, NZD-JPY, I think is probably a picture that's not really too pretty. It doesn't look nice at all. All right. The only thing that is clear that there is a monthly stop hunt though here. And there's also a monthly stop hunt on the other side. Now, this one is slightly stronger and you asked me how, Michael. I'm glad you asked. The reason why this stop hunt is stronger is because it's not just taken the previous month's high, it's also taken this high as well. So we have a type 1 and type 2 monthly stop hunt. Now there is supply here in this range, probably not the most nicest to see. We have supply liquidity that comes from here. Now, if you're wondering where it is, I'll just show you. We have these two candles here. Now, in a situation where you have a bullish candle with a very small body, and then you have a previous very strong bullish candle, and then price still drops short. Now, the rule is with supply and demand, the easiest way to find it is going to be the last bullish candle before the price changes direction. That will be your supply liquidity, and vice versa. The last bearish candle before the price goes long, for example, let's say here, would be your demand candle. So this is demand right here, just as an example, all right? I'll just make this red so that it matches the candle. Just go for crimson. I think the crimson's ugly, let's change it. Let's just go for something a bit lighter, like a light pink. Yeah, that's a bit better. Now on this side, so when you have a situation like this, what you would do is just put these two candles together and class them as one. And then if you drag this across here, you can see that the price just about clips the zone. And if I take this here, put this in blue, then you'll be able to see what's going on here. So you can see what's going on in terms of supply liquidity. Now, since this monthly stop hunt is stronger than this one, even though the wick is longer, which means that in terms of induction, this is a stronger induction. If NZD-JPY is to go long, it would need to do an RTO. It's filled this little gap here, which is pretty good. It might fill it with the body, but at least it's matched it with the wick. What we'll need to see for in order for this trade to give us some sort of activity is there's two options. Now, the short that I'm taking shouldn't last forever. The reason why I want to take the short, and I explain quickly, is across here, the last major area of demand, there's this very long wick here, very long induction that happened that price didn't return to demand for. There was an attempt here which price should have basically done this, but it didn't do it. So as a result of that, my idea is that I'm expecting the price to possibly push short. Now, on the other side of the story, we have a monthly validation point here, which is what I'm working with. We go down to the weekly, then you can see that the weekly stop hunt that we're looking at is right here, this one here. And then if you go to the D1 and then to the H4, the reason for the trade I gave you last week and why the price is behaving the way it is a bit more clear. Now, I know I do have a lot of lines and I'll probably remove some in a minute, but this is the weekly stop hunt. Price took that high. If you're wondering where supply is for this trade, it's this entire blue area here. Everything in this area here is supply. I'll use the wick in this case because you're going to need it. I usually use the body, but you can add the wick here. This is supply at the moment. Now, I prefer to use the body because it shows more what the price is, where supply is. And I don't have enough time to explain that right now, but we could use the wick here. If I go to the H4, this is where we're operating with. Now, the trade was very simple that I gave you guys. We had a weekly stop hunt here. Can delete this line for now. I'll delete this. Can I reach that line? Yep. Here's the weekly stop hunt. Here's the daily stop hunt right here. All right. Here's the market structure break. So to be fair, any swing low before the price broke market structure. Now, I prefer to use the day before. So there's a really nice swing low here that produces the MSB. So I'm going to put this here. Market structure break over here. And then after we have here type 1 D1 stop ons. Let's just type that here. Type 1 D1 stop on, no. Okay, so that's that aspect here. And then after the H1 POB, or the principal order block, is up here in the white area here. So the entry that I gave you was over here at the edge of the zone. And you can see why I gave it to you at the edge of the zone. Price did drop down somewhat into the next day. You can see we had from here to here was about 60 pips. But then the market closed, opened with another return. Then you can see a strong push up here to get into deeper liquidity, which is better. And price went short. Now, if you didn't drag your stops to even, because even though we could have tighter stop losses, I said to just keep it up here. If you left it here, price dropped again, then returned one more time, and now it's dropped a little bit longer, or a leg stronger for the short. So in a situation like this, the most simple way, I mean, I know I've said quite a few things, but the simple way that the price action you know, would be great to go for would be he got A and then you have B. And then what we can do is that at the next available stop hunt, if there is one or something like that, then we can look for the next area of supply that price can go by. Now, if I zoom in a little bit, for those of you students, you should probably see this already. We have a demand flip zone over here, okay, that the price is used. So my estimate is that looking at price, one of these supply flip zone, one of these would be good to use. If I take A and B, if you want to use a Fibonacci here, you can. If I drop the Fibonacci on from here to here, the 86 level is the deepest area here. What I'm interested in is not the flip zone. I'm actually looking at the supply zone created after. So this range here where the supply is, an entry at OTE, if the price was to come back here, is good enough. Now, if the price went all the way back and did another weekly stop on or whatever, that would be good too. But even this is fine. This is really, honestly, this is fine just if the price comes back here, you know. Now, the way that I want to, which is a caution here, is that at 9:45 GMT UK time, we do have high impact news. So and if I find the high impact news, I want to see where it is. So if I go back here quickly, and I go over to 9:45 today. So at 9:45, here we go. So at 9:45, we have the employment change and the unemployment rate, which is big figures for, especially for New Zealand, who has probably done some of the strongest interest rate hikes we've seen. The employment change, if it is negative as suggested, and the unemployment rate stays the same, then that's going to be negative for the New Zealand dollar, Japanese yen, which means NZD JPY could push down short already tonight. If it comes out positive, the market actually may use this as our RTO and push up a little bit stronger long, or for a stronger long, and then we can go short. So coming back here, I wouldn't take the trade the same way I take in Euro JPY. I don't even know if it's working out. You can even see there's actually a correlation difference. NZD JPY is going short, and the trade I'm looking at is actually going long. It's in the money by a little bit. So what I want to do is see what the price is going to do. And I think the final thing I would say on this note is that because we're coming into February, if this news was going to happen in February, it would have been good because we could have had a monthly high stop hunt, but maybe we might not get that. So that's why with NZD JPY, I'm just looking out for a pullback, and hopefully we can get one. And if worse comes to worse, guys, where we can't literally get anything, if you guys can observe here, there's a supply zone. Now, I'm going to have to take off the period separators for you to see what I'm looking at. The market open here, this is a new day. It returned into supply liquidity or supply flip zone here. So the simplest thing we can do is that on the break and the return, I know it's a very small zone, but I've made money from these very small zones many times over. If the price re-optimizes supply for its original use, which is what it is, then from here down to here, we could take a trade also. All right, so be aware of that because that's another way we can get the short. And of course, our targets would be, if I go back to the H4, the first target would be where those equal lows were. Now, I actually can't find them. I think the equal lows are on the H1 or M15, I think. If I take this supply flip zone, I'll know where I find them. Or maybe that's Euro JPY. I can't remember too well. But anyway, our targets are somewhere down on the short side. I need to remember the targets, and I'll post it in a group. But this is the option here. So is there any questions at all before I finish off? If there are no questions at all, then I'm going to let the price do what it needs to do for today. This is my only trade for today. I want to keep that one up and see what happens with it. And then after, we'll take it from there. If there's no questions, I think what I'm going to do, I'll make sure I leave this recording for you guys. And I know this was a good one. I spent some time talking for a while so that you guys can have like a full plate of breakdowns to go by. Now, tomorrow morning, of course, our analysis will be important because we'll be looking at what's going on. And from there, we can really see what the market is trying to do. So I'll catch you guys later on. Everybody take care and have a great day.